Meet Mary. Mary owns a business called Mary's Incredible Cakes and has this delicious cake recipe. Not only is it the best cake in the world, but it's also surprisingly healthy for you. It's a secret recipe. Everybody in her town loves her cakes. Mary just has one problem. She needs to raise money in order to grow her cake business. Mary's goal is to bring joy to people's lives by getting these incredible tasty cakes to the entire world. Mary needs more space, better suppliers, more bakers and operational workers, larger ovens, and top-of-the-line marketing campaign. Mary's estimate this will cost her about $400,000. But her problem? She does not have $400,000. If a business owner or company wants to raise money, they have two options. They can either issue stock or issue bonds. One way for Mary's Amazing Cakes to raise the $400,000 is to issue a bond. A bond is a type of investment where you, the investor, lend money to either a company, a government, or municipality, and they promise to pay you a specific annual interest and give you full principal back at a specific date in the future. Bonds can vary in length. They can be very short, as in days or months, or they can be very long, as in years or multiple decades. An extremely important factor about you buying bonds is you do not actually have an ownership interest in the company. You are simply a lender or debt holder. Mary's Amazing Cakes issues 10 bonds, each for $40,000 with a 5% coupon for a term of 10 years. The coupon is the interest the company will pay each bondholder every year, and the maturity date or term of the bond is how long a bond will last. This chart will help you better understand the numbers. Each bondholder invests $40,000. They will receive $2,000 a year in interest for 10 years, and then at the end of the bond term, they would receive a total of $20,000 in interest payments and get their full $40,000 initial investment back. It's a win-win situation. Mary's Amazing Cakes will be able to get the money they need to grow their business without giving up any ownership of the company. The bond investors will make interest every year and get their money back, but you need to know that companies do not always make money. But companies can go bankrupt and default on their debt, which is the investors could lose their original investment and promised interest. With bond investing, as with any type of investing, it's very important to do your research. Can the underlying company, government, municipality pay their debt obligations? There are credit rating companies that give credit ratings on how strong and how safe they believe a bond issuer is. They're not always accurate though, so you'll still need to do your own research, but it's a good place to start. The second way Mary's Amazing Cakes could raise the $400,000 in capital they need is to issue stock. A stock represents partial ownership or equity in a company. When you buy stock, you're actually purchasing a tiny slice of the company. The more shares you buy, the more of the company you own. Each stock has its value based on the value of the underlying company. Mary brings on 9 investors, each buying stock to own 10% of the company, to go along with Mary's 10% ownership. By issuing stock, Mary was able to get the money she needed without having to borrow money and go into debt. Within 5 years, Mary's Amazing Cakes explodes all around the world and now has 100 stores worldwide. The company's value is $100 million. Now, Mary's 10%, along with her investors' 10%, is worth $10 million each. This is a great situation because everybody wins. But in the business world, not all companies are successful. Mary's Amazing Cakes could have failed and filed for bankruptcy, leaving Mary and her investors with losses. But this was a win-win situation. Mary and her investors did their proper research before investing their hard-earned dollars. The investors were very smart and researched the cake industry as a whole, the historical and future goods and services, the factors that could affect the cake business in both a positive and negative way. They examined Mary's corporate structure, leadership, financial habits, and current financial condition on the company. They diligently analyzed balance sheets, income statements, overhead, and most importantly, company profits. Proper research and analyzation is why these investors had so much success. Stocks are a great way to make a lot of money over time. When you own a stock, you are an owner of that company. You will participate in the profits and losses. The secret to success? Learning to read financial statements, understanding what you are investing in, and being patient, because sometimes it can take a little time.